The Great American Bankruptcy 2025, 2026, 2027, guys. It's going to happen, okay? Despite of the market pumping in the last 4 days, literally on fumes. I mean, most of the people are just like, wow, we're so bearish and now we're so bullish. There's nothing bullish in this market. The collapse is going to be astounding by the end of 2025. The dollar devaluation that has already begun is unstoppable. That's why we're talking about the Great American Bankruptcy. Now, there's a lot of wealth that's going to be created as a result of that, and I want you guys to simply be on the right side of this market and taking the trades that are going to put you, make a lot of money for you on the short side. So, with that said, let's review what's actually happening right now. The truth and nothing but the truth about the current state of the stock market in the United States. The current state of the trade war, the current state of some of the charts. So, guys, I'm not sure, okay, how much of an understanding anyone needs about the financial markets. Certainly those on Wall Street should have the ability to do 2 plus 2. But apparently they fucking don't. And that's the reason for the rally in the last 4 days. Now, I can't even call it a rally because there is really the participation, the volume, it is so weak that this thing could collapse at any given moment. So basically going into next week, the GDP number, April 30th, I mean, don't be shocked if the market is back in the 4,000 handle, like 4,900, 4,800, 4,500. It's coming. I could be off by a week or two, but this shit is absolutely fucking coming. So I don't know why it is so difficult to understand for some people when you have empty containers arriving from China to the United States. That does not equate to lower prices, okay? The goods are simply not coming in. Okay, empty containers are coming, yeah, but guess what? Even the empty containers are about to stop coming. So what do you think is going to happen? How's that going to translate into economic activity? How's that going to translate into pricing? You don't have to look no further because every sign of major stagflation that we've been talking about in the last 15 months, it is here. And yeah, there's some people on Wall Street that think it is absolutely, there's no way stagflation is going to happen. Well, take a look at the home sales number that we got in yesterday. The home sales have dropped to the lowest level since, well, you guessed it right, since the fucking great collapse in 2008, 2009. That's the lowest number, guys, since then. And guess what's remarkable? The main argument over the last year or two has been, well, we have such a shortage of homes, so of course the prices are going to go higher. Well, guess what was reported yesterday? The surplus, okay, not the surplus, but the amount of supply that have hit the housing market went up 20% on year-over-year basis. That is fucking insane. And what's even more insane is the average median home price still managed to go up. So what are we talking about here? So what everyone was complaining about, well, there's a shortage of homes. Well, now you got an abundance of homes available for sale. Everybody wants to sell, nobody can, and nobody's dropping the price. Okay, that is pure case of stagflation, okay? How can it be that the supply of homes goes up 20% and yet the prices are not dropping? Like, that's why people have such a difficulty understanding what the hell stagflation is, because it is such a rare phenomenon. You would think that you have such an incredible oversupply of homes right now, you would think the prices would come down, but no, they're going up still, which is a perfect case of stagflation. You got slower economy, less people can afford their home. They're fucking selling for that reason, and yet the prices are going up. Guys, there's no, like, the reason why people think that, oh, well, it's not a big deal, they're going to cancel the tariffs, everything's going to go back to normal, and I'm here to argue that everyone that's thinking that is absolutely wrong because they misunderstand stagflation. So in case of anyone that remembers how crazy the COVID crash was, okay, it only lasted a couple of months. So you could argue that, okay, but we're done. The low is in. The market is not going to drop lower, okay? And, it's not as bad as the COVID crash, but in reality, it is much worse than the COVID crash because this is just the beginning of the big crash. And some people just simply misunderstand that prices sometimes they absolutely have to bounce by definition of the markets before even a bigger drop is going to take place. Now, the main issue here that this crash is not going to be as short-lived as the COVID crash because there's simply, okay, for the COVID, you could have made vaccines. We can sit and argue here whether they were effective or not. Basically, the virus of COVID was, after a while, controlled, okay, due to natural reasons or vaccinations or whatever, but it was controlled. Now, there is no remedy for a quick solution for stagflation, so there's a totally different type of scenario that's about to unfold as a result of the stagflation case. And those that are thinking this is a short-lived downturn in the markets, they got it absolutely fucking wrong. So what you're hearing in the news is absolutely the opposite of what's happening. So let me give you an example. The stuff that's being talked about, such as, hey, we're about to make some deals with China. We're about to make some deals with this country, with this country. Let me just simply ask you a question, okay? How many deals have United States made since April 2nd? The whole idea was right. It's the master of the deal, the art of the deal, right? You put these big numbers, everybody shits in their pants, and they come to negotiating table. So we're on April 25th as I'm recording this, and what have been accomplished in the last 23 days? How many deals have been made? Well, the answer is simple, 0. So you've made 0 trade deals in the last 23 days. But yet you're here to say that in the next 67 days, you're going to make 55 deals? The probability of that is below 0, okay? You can't even assign a 0 probability to that. It's fucking below 0. So at the speed at which these deals are made, okay, and that's being sarcastic, you will need a whole fucking century, okay, to put these to put this many deals together. But I'm telling you that deals are happening everywhere in the world right now. They don't include the United States of America. What do you think is happening? Okay, the low-hanging fruit, right? You would think that in the last 23 days, the White House would have been able to make a deal with at least the low-hanging fruit, such as like Japan. Well, they tried and they made it seem like there was a deal, and guess what? There's no fucking deal there. And now they're going to pick up the next low-hanging fruit is India. Well, why India? India actually has got bigger tariffs on the United States than fucking China. But they can't have a trade war with China and India simultaneously. So they got to pick one. They can't fuck with both of them. So basically they're going with India, which technically could be the low-hanging fruit. But the deal with India hasn't been done either, which possibly could be one of the deals that could be made in the next 30 days. Who knows? But nobody knows, in reality, who's going to be making deals with the United States. But what we do know is the entire world is making deals with who? China. China is making deals right and left. Guess what? All these goods that were going to go to the United States, guess where they're going to go? They're going to go someplace else. All right, and let me break this down. It's pretty simple. Okay, this is not just a tariff war, right? For some reason, there's been very little coverage of the extra fees and shipping barriers on top of the tariffs that the White House have placed on the Chinese shipping companies. So literally, there's like $4 to $10 million per trip if the vessel is made in China. And the only way to avoid that is basically United States is literally blackmailing Chinese cargo industry that manufactures all this shipping cargo carriers, basically saying, well, you guys are making 80-90% of that and it's your fault. No, it's not their fault. The fault is United States is so fucking behind on a lot of shit and they like to blame the whole fucking world for it while they're sitting on their ass. So the point is very simple, okay? It's not just the tariffs. It's not just, I mean, there's plenty of other barriers that United States is introducing. And one of them is like, imagine you own a cargo ship that goes to the United States with goods, and now you got to pay $10 million extra. So before you make a penny, you got to fork out $10 million because they do this, they introduce this crazy measurement. It's per metric ton, but it doesn't specify whether it's a cubic or whatever. It's complete insanity, basically. So it's not even worthwhile going into details. The main outcome of this is it's not going to help United States to manufacture more cargo ships. If they wanted to do it, they could have fucking done it already by, getting rid of some regulations. But, instead they're choosing to blame China on everything. The kind of barriers that United States is introducing to anything that has to do with China, they're so ridiculous that United States is going to end up not receiving any goods from China. Oh, like not literally any, but the amount is going to go drastically lower. So maybe 50% lower, maybe 80% lower. So basically, United States is in a position where it's going to receive a lot less goods from China. And right now, based on these new introduction, which is on top of proposed tariffs, China's got every reason to make a deal with every other country besides the United States in the next 6 months. And China's already making deals. And it's actually not even China that is reaching out to the rest of the world to make deals. It's countries like Canada and Mexico and Australia and Japan. Okay, what do you think Japan is doing? Like, the main argument was in the recent few weeks is it's China unloading United States treasuries. No, it's Japan that's fucking unloading United States treasuries. Okay, it's Japan that's not making a deal with China. I'm sure there's going to be something happening where they're going to call it a deal, but it's not going to be any fucking deal than what China and the United States already have. Okay, but they're going to announce it a great victory and, oh, whoop-de-hoo, the market even bounced on this bullshit. But in reality, okay, Japanese are not making any fucking deals with the United States, okay? They may say, well, we'll invest so much money, we'll build a factory or two, just smoke screen, while Japan is really the ones that's selling United States government bonds. But in the meantime, Japan is making real deals with China. So there's this major shift that's taken place, and it's totally not what you hear in the media. It's not United States making deals with other countries. It's other countries making deals with China. Which takes me to my big argument of United States bankruptcy 2025-2026. There are two components of the bankruptcy. They're quite simple, okay? Actually, there's three components. So one is you're going to have fewer goods coming into the United States. There's going to be shortage on the shelves. Prices are absolutely going to go higher. by the time the United States is going to be able to manufacture all that shit that they were getting from China, okay, it's not going to be fixed overnight. It could take a couple of years. It could take 10, 15 years. It could take 20 years. It may never get to a point where it's actually happening. And when everything that's made in China is going to be trying to be replaced by United States manufacturing, that shit is still going to be way higher in cost. So either way, what do you got? You got fucking inflation. You got inflation to the moon. But short term, I mean, it's going to get really ugly. Like, imagine going to a store and half of the shit that you would normally buy is not there. Okay? Like, it's going to get wild. It's going to get absolutely wild. So the prices are absolutely going to go higher. The economy is going to go to shit. Why? Well, because anyone that has any sort of business associated with, physical goods, for now, I'm saying physical goods, but if you paid close attention to the derivative trade of what's happening now, United States service exports are also going to suffer. So, like, the easiest trade on Wall Street that they're talking about in the last couple of days, well, it's the software companies. They cannot get hurt. That's like the greatest fucking short, okay? Because, the tariffs on United States exports, service exports, such as software companies, okay? It hasn't hit yet. It's coming. It's coming, guys. The result of everything that's happening is United States is absolutely going to lose a lot of fucking business. All right? And point one, or result number one of that is less people are going to be using United States dollar. Okay? The trend has started, but we have not even seen really the beginning of it. It's about to accelerate in a phenomenal way. So, the American bankruptcy is going to result as a substantial weakening of U.S. dollar, a weakening of United States dollar to a level where we haven't seen ever in history. I mean, we may reach a situation in the United States that could be compared to hyperinflation. Hyperinflation, absolutely. So this is something that, for whatever reason, nobody's thinking of talking about yet, but it actually has a very elevated probability of happening. Now, let me say this, that if United States dollar was to devalue, depreciate in relation to Chinese yuan to the magnitude of 50%, that would officially make Chinese consumer the strongest consumer in the entire world. Because by the time you combine the number of people in China, okay, this will make China the greatest consuming power in the world. So many argue exactly the opposite. It would not be in the interest of China to allow their currency to appreciate, okay? But guess what? China is self-reliant. And if their consumer buying power doubles in the next 12 months, guess what it means? China no longer needs the United States consumer, who's going to be broke. The United States consumer is already broke. I covered that in the last podcast. But China could simply have enough buying power to consume everything they produce themselves without having to send shit to United States. That simply is accomplished by Chinese currency doubling in relation to United States dollar, and the probability of that is so elevated that it is shocking that all the fucking economists are silent about it, that nobody in the White House can see it coming, okay? It is absolutely absurd, ridiculous, fucking, how can everybody be blind to the fact that Chinese consumer is on its way to becoming the biggest consumer in the fucking world. It's no longer going to be United States. And all it's going to take is for dollar to lose its value just a little bit further. I mean, the dollar's down 10, 11%. It's still trading under 100 if you look at the DXY. If you look at the USD, if you look at the dollar chart, it's under 100. It's having a very difficult time breaking above that. So the bounce we had in the dollar in the last couple of days, it's not going to be sustained. We're about to reverse lower, and when dollar reverses lower, everything else in the market will absolutely reverse lower. When we're talking about United States market, the bonds, don't even get me started on oil. Oil's got to be the easiest fucking trade in the world right now, because guess what? Right now you have a situation where you have empty Chinese containers coming to United States. There's nothing in them, okay? Well, pretty soon, you're not even going to have that. So a lot of the fuel demand is going to drop off because there's going to be no containers coming. And a sure sign of that, if you look at the transport index. Now, about 3-4 months ago, I recorded a video pointing to the fact that every big recession starts with the transport sector beginning to perform poorly. I've given you the charts in that video. I've shown you how companies that deal with transportation, anything from cargo ships to Federal Express, UPS, to trucking companies like Old Dominion, ticker OTFL, right? Look at their charts. Every one of these charts, it's hurt. And just when you think they cannot get hurt anymore, look at the transports today, April 25th. They're going even lower. Particular hit, there's one transport and logistics company that went down 30% at the time I'm recording this, ticker SAIA. SAIA is the ticker for this transport company, logistics operator, and the shares are down $100, 30%. Yesterday it was at 350, today it's at 250. Okay, and that cannot be a good sign. And certainly this could not be misinterpreted as something positive for the United States. This cannot be misinterpreted as, no, we're not in a recession. And there's still idiots on Wall Street out there that are arguing the probability of a recession. We've been in one. There's still idiots on Wall Street that are arguing the probability of stagflation. United States is in fucking stagflation. It is in a recession. It is in stagflation. It has already happened. And the reason why the market's going to drop by so much more is because, well, it's not going to get any better anytime soon. And there's still so many people that are yet to arrive at a conclusion that the recession, that we're in the middle of the recession already, that we're in the middle of fucking stagflation already, that by the time those market participants that are currently murdering themselves buying the dip, by the time those idiots come to a conclusion that they were wrong, they're going to be dumping a lot more shares. So the market's got it's a one-way market. It is absolutely going way the fuck lower, and there's no way out of it. There's absolutely no way out of it, because stagflation is not fixed by a vaccine. Stagflation cannot be fixed by Federal Reserve. Stagflation cannot be fixed by Trump threatening the Federal Reserve. There's no quick solution for stagflation. Actually, believe it or not, the only solution for stagflation historically is to raise interest rates, not lower them, is to raise them. Well, what do you think is going to happen if interest rates are raised? Well, shit. For those disbelievers that the recession is already full-blown, well, they definitely gonna believe at that fucking point how bad things really are. Now, the third thing, the first was the dollar devaluation. The second was the crazy price spikes that are going to impact a lot of U.S. businesses. A lot of businesses are going to be filing for bankruptcies. You're going to see a record number of bankruptcies going through the United States because it's a domino effect, right? And again, this particular dominoes, they're going to be folding for a while. This is not something that's going to be stopped by just Trump backtracking on his word and saying, well, okay, let's do no tariffs. Fuck it. The ball is in motion. The deals are made all over the world. They just don't include the United States. The impact in the result of that is yet to be seen as far as the United States economy. It's going to be in free fall. There's absolutely no fucking way out of it. There's nothing that can't be done. But that's point number two. Point number three is nobody's going to be buying United States government bonds. So the only solution to that is to monetize the debt. Monetizing the debt will include Federal Reserve would be the only buyer of United States government bonds. Basically, they'll be creating more free money out of thin air, and that's going to elevate the level of inflation never seen in the United States of America. So, plain and simple, okay, that's the very base scenario. So for those people that are buying the market on hopium, well, hopefully you'll cancel all the tariffs tomorrow. Well, hopefully they make a deal with Japan. Hopefully they make a deal with China. Hopefully they make a deal with India. Hope, hope, hope. People have been hoping for fucking 23 days and you have zero deals, okay? You would think that, let's say by day 30, people are going to start getting concerned. And at the same time, when people are going to get concerned at the lack of deals that are actually being made, some bad economic data is going to start coming in, like the GDP number on April 30th. Everyone expects already a bad number. I think the number could be way worse than it's expected. You got a job report. Of course, all of these reports could be manipulated and presented far from reality. Okay, they've been getting away with it with the prior Democratic, fucking whoever ran the Biden administration, right? They've been doing that for 4 years and they've gotten away with it. But I think the numbers are so bad at this point that there's going to be no way to masquerade them. There's going to be no way to possibly make them look better than what they really are. So as economic data that's coming in is deteriorating, it's going to coincide with many market participants realizing that all this talk about deals and there's zero deals that are actually made. And if you take that velocity of number of deals made and you simply try to apply it to the next 67 days, it's not looking good. Okay, so I think the hopium is going to die out with each day. There is no deals, and the weight of the economic data and the poor guidance from a lot of companies that are reporting earnings is going to take hold of the market, and therefore you will absolutely see markets going way the fuck lower. Now, some of the easiest trades I've sort of mentioned in this video, in this podcast. So most of the people think gold has stopped out. The moment DXY or USD, the moment a dollar breaks lower below 98, gold is going to fucking skyrocket again. There's no way out of it, guys. It's stagflation. Study the history of stagflation in the 70s. The only thing that goes higher in stagflation is gold. That's it. Gold, silver at some point could kick in. But there's nothing that's going to appreciate more than gold. Now, for those of you that are, looking at the price of Bitcoin going higher over the course of the last few sessions, guys, look at the volume. Like, it's amazing how many people get fucked in the markets by looking just at the price action without looking at all the ingredients, the composition of what's happening. This has to be absolutely the weakest bounce in crypto we have ever seen throughout the entire history of crypto. Yes, the price is going high, but there's no substance behind it, which means the moment the market is going to reverse, the moment the dollar is going to reverse and go lower again, entire crypto space is going to have such a fucking collapse like nobody have seen. I'm telling you, even stable coins will collapse. Okay, and we're not touching crypto on the bull side until that event takes place. And the reason why that would actually take place is because of the bond market crash. Stable coins are backed by nothing more, nothing less. You can't, I can't even say it in a sentence without laughing about it. I mean, this is how stupid this shit is. Stable coins are backed by United States government bonds, which are worthless. So what does that make the stable coin? Okay, connect the dots. Anyways, the bond market is about to explode. Despite of actually bonds doing pretty good in the last few days. But I think that the entire move higher in some things is simply because the dollar stopped dropping. The moment the dollar resumes the drop, you're going to see everything fucking drop again. So it's very simple. The most important chart to look at is the chart of USD, DXY. When that stuff is going to drop below 98, oh, be ready. There's going to be a whole new lag in the market, way the fuck lower. And so I just want you guys to be ready for it. Okay, don't be mesmerized by a couple of green candles. Don't be mesmerized by the price action that temporarily, when you're looking at it, it's going higher and you think it's bullish. Oh no. Like, don't forget the Great Depression. Don't forget, like, I'm talking 1929. There was a 50% rally in 1929 before the market dropped down for good, for real, like fucking 80, 90%. So, guys, don't mistaken the price action for bullish action, because the composition, what's behind that move, is totally unsustainable. It's totally unsustainable. So be ready to buy a ton of puts. Next week could be looking totally different from what you've seen this week as far as price action. But if you are clicking the wrong buttons when it comes to buying puts or calls, going into next week, guys, it could result in a total disaster for you. So get in touch with 13 Market Moves Coach. Go to 13mmtv.com. Study up all the courses. The market moves sequence have been neutral, but going into next week, okay, I mean, the sequence could be really, really red, like 2-3 type moves day after day going into next week. Could be wild. So in any case, I wish everyone happy trading going into next week. Don't confuse the temporary price action for long-term bullishness in the markets. Focus on these three core developments that are taking place worldwide right now. There's no way that United States market is not going to collapse by at least 50% by the end of 2025. I would say there's 100% probability that from where the market is, we're going to go by 50% lower by the end of the year, because the drop you have seen in the United States market so far is nothing. It is nothing. People just reprice some things, and there's hoping that, hey, the worst is over. What people even haven't seen the beginning of how bad things could get, how wild these drops could be. So, I mean, Russell 2000 trading at 2,000 points. I mean, don't be shocked. Russell 2000 is going to go to 500. 500. Guys, we're talking about big trades here. Oil is heading to $30, guys. Absolutely, oil is fucking heading lower. So, I mean, these are easy trades, but you got to have the right instruments to trade them. Trading options and futures is absolutely the best way to capture some of the biggest moves in the markets, because a lot of times they happen outside of the regular market hours. So make sure you got your account set up correctly to take advantage of these big moves. If you don't know how to do that, get in touch with us at 13mmtv.com or 13marketmoves.com. Let's roll.